Well, a brief survey there of the important numbers. Now we go to the Kenya market update, and joining me is Halima Sadia, who is research analyst at Old Mutual Securities. Morning to you, Halima. Monday, the start of a new week. Let's just take an overview of what the exchange did the previous week, last week.
Morning to you too. We see last week there was a sustained rally at the Nairobi Stock Exchange, buoyed largely by speculation in the energy sector, which are expected to release their results coming this week, which is KenGen and KPLC. We have seen there were, in the banking sector, there were like dips in the prices of the most banking stocks as a result of the companies were having, most of the investors were having profit taking. We've seen there was an increased demand in the Safaricom shares and EABL, EABL also as a result of price correction after the shares had lost early this month after it had released their results, and Safaricom's was trading at they were closing their books last week, so we saw increased demand in those counters.
Of course, EABL and Safaricom together round about close on a third of the market. Outside of those two shares, what would the market have looked like?
Outside the markets, as I said, we saw good appetite in the energy stocks, which is mostly driven by speculation ahead of their full year results. Both KPLC, Kenya Power and Lighting Corporation, and KenGen are expected to announce their results, so most of the investors were banking on that.
Okay, and then just looking at some of the economic environmental issues there, the pump price, the fuel price review, that's been increased in the latest review by the regulator. What's behind that, and how long is it going to last?
It's done month on month. We've seen for the third straight month the energy prices has risen, partly because of higher import cost. We see in this last budget there was an introduction of if I'm not wrong, a 1.5% on importation imports, so it will cost 1.5% higher. And also we see generally there has been an increase in the VAT prices, so we believe inflation is going to go up, but largely the fuel prices have risen because of one weakening shilling, which has almost weakened compared to when it has started early this year, and also as a result of higher import costs.
I see also there's a 1.5% railway development levy, which sounds good in terms of getting traffic off the roads and getting more traffic onto rail. Is that going to be effective? Yeah. And I suppose the question has to be asked, experience in other countries, including South Africa, is when a levy is put on a price for some particular purpose, often the money goes into some big government pit somewhere rather than being allocated to the purpose that they say it's going to.
I believe it will be allocated. I don't know, but it depends with how committed the government is. We've seen rail transport will tend to be a cheaper way, or a cheaper cost of transportation, basically moving the goods from Kenya to Uganda, which is one of our key regional partners. So we believe they have put this deliberately because they want one infrastructure, and the key initiatives in the government, in this government, one is the energy sector and the infrastructure sector, which is mostly also you can put now transport under that. So we believe they are committed towards it, so only time will tell.
Yeah, and of course, if Kenya develops that resources sector more, you're going to need more rail there, because those are cargoes that are perfectly suited to rail freight rather than road freight. And then there's the African Development Bank being given a special status by your Treasury Secretary.
Yes, we have seen they have been given a license, a go ahead to issue a bond denominated in Kenya shillings directly through the market, which we see, I'm sure it's as a result they want to curb on the exchange rate risks, and also as a result we believe now it will directly benefit the local lenders they give the money to. So we believe it's going to be, it's one of the key areas to watch about, but it's definitely a positive outcome.
Okay, well, that sounds encouraging. More capital investment there in Kenya. And perhaps on not a lighter note, but a more pleasing note for most people is the hotel investments, and Nairobi apparently topping Africa in terms of hotel investments. This sounds good for tourism for the country.
Yes, we've seen Kenya has emerged. We also see a city report that has just come out. Kenya might emerge from a frontier to an emerging market. So definitely it's good news for the Kenyan. We see our economy is growing, expected to grow. We have seen the recent discoveries of oil, water in mostly the Turkana region, where it was an arid region. We see the economic growth. We see Africa as a whole. We see the rising youth population. Definitely is a good story for Kenyan, and for we see for that it will definitely impact on the tourism sector. We see increased foreign direct investments, meaning more travelers, and they will need to go to there was a need for decent hotels.
Well, that certainly sounds encouraging for the tourism sector. That was Halima Sadia. Thanks, Halima. She's research analyst at Old Mutual Securities, speaking to us from Nairobi.